This is the briefing for Friday, June 23rd. I want to start tonight with a little bit longer outlook on the indices. I'm going to try to do this on Fridays, is to look at the longer term, then bring it down into the shorter term. During the weekday briefings, I'll give basically just a shorter term analysis and potentially at times compare that to the longer term if I feel it's appropriate. This is the spiders on a weekly basis, and you can see the rotational pattern that they've been in going all the way back to June 24th of last year of 22. So basically, we've really not gone anywhere except for this breakout that we saw last week that attempted to break out above this 434, 435 area. But it appears now we're retesting that breakout. The interesting thing here, and I want to point this out, is that when we do see a breakout of a rotational pattern or any type of a pattern in a breakout move, it's really important to determine whether there is strength coming into that breakout, in this case to the upside. So the question we have to ask ourselves is, okay, there's a breakout in price development, but in price structure, is there a potential strengthening of this? Is this move, this breakout move, attracting new buyers, or is it not attracting new buyers? And one of the key things, if I go back 3 weeks, and this is market breadth, you can see back here. So this was the peak about 4 weeks ago of market breadth. Then if we go back 3 weeks, you can see breadth declined pretty dramatically, even though we made a new high and attempted to break out. Last week, then, we had an even lower breadth reading on the breakout. And then, of course, this week we have a retest of the breakout, and breadth is even lower. 52-week highs minus 52-week lows are declining, suggesting a continuation or a weakening within the indices themselves. Now, while price appears to be holding up, it has not traded through this important support level, 434, 435. But there is a definite weakening from an internal structure perspective on the stock indices. Now, the Nasdaq is about the same. The Nasdaq price, you can see it is well above its breakout point, going back about 5 weeks even. And you can see the breadth was strengthening going up to that, but now it has been declining. This is a huge, for the last 3 weeks, huge divergence in market breadth in the Nasdaq, and that simply is caused by the higher weighted stocks within the Nasdaq moving higher through the weeks, while the majority of stocks within the Nasdaq are trading lower. And you can see even in this week, we ended the week 1,490 shares negative in the Nasdaq. That's something that cannot continue. Either the greater number of stocks will even weigh on the higher weighted stocks, or we're going to see some type of change, typically around a news event in market breadth, that will come in and support price development. Now, I've said this before several times, is that the higher probability is always for price to correct to the internals. The lower probability, and there is a lower probability, that the internals will correct to price. That lower probability typically occurs around some type of a news event that changes the perception of value on the part of traders and investors, and then we see the internals begin to strengthen as more and more traders and investors realize that the breakout is real and that it is potentially going to continue. Right now, we don't see that. That is not occurring. The internals continue to break down, and in today's trading was even lower. Volume fell off this week. It was up last week, but it fell off this week. So this move to the downside certainly is not becoming impulsive, at least at this point in time. Now the Russell, a little bit different. We have this rotational pattern that it's been in going all the way back to June of last year. And then, of course, we look at Russell breadth, and it's about the same. 3 weeks of continuing decline in market breadth. And then, of course, volume falling off between last week and this week in the Russell as well. So basically, where we are is we are back really in the spiders and in the Russell at important longer-term support levels. The NASDAQ, not so much, mainly because of those higher weighted stocks that are holding it above this 340 area, which is the next level of support, or longer-term support, I should say, for the Qs. Going back to the spiders, you can see once again that volume was falling off in the spiders this week. So even though we're retesting these support levels, it is not becoming impulsive. And unless we see volume increasing on any additional move to the downside, I suspect that the potential is we're going to spend time rotating around these key reference areas, at least at this point in time. Now, I want to go to a daily chart, or 60-minute chart, I should say, of the three indices. And you can see here that, and I've talked about this week in the weekly briefings, and I think this is important. Now, technical patterns that we see are really, they're really valid, but they're valid not until they fulfill themselves. So while this appears to be a head and shoulders top, we have the neckline that comes right in around 434. And remember, 434, 435 is an important key reference area. We broke it slightly in the spiders today, but we spent most of the day rotating around that 434 to 435 area. Important longer-term key reference area. If that's broken, if this low of today is broken, that would then suggest that the fulfillment of this as a head and shoulders top is potentially in the process of developing. Unless or until that happens, this is not a head and shoulders top, and we could see another move back to the upside, or we could see rotation around this area for quite some time. In the Qs, you can see the same thing: a shoulder, a head, and another shoulder. And the support area is 360. So we're basically just above that level in terms of the Qs. So it would be important to see that level broken, and broken with increasing volume, and that would then suggest that the fulfillment of this potential as a head and shoulders top is in fact occurring. Unless or until that happens, this is not a head and shoulders top. What I don't want anybody to do is short this market based on this chart pattern, thinking it is a head and shoulders top. It is not until the neckline is broken, and broken impulsively, and that has not occurred, at least at this point in time. Russell, a little bit different. Russell was basically in an area of rotation, broke that area of rotation in yesterday's trading, and then of course broke it again today. So the Russell is showing more weakness than the other indices, and also the industrials are showing more weakness. Now you can see this is the industrials right here, and you can see the rotation that they've been in going all the way back to November of last year, and you can see this rotational pattern. You can see it tested just last week the 34,500 area, and has backed off almost halfway through this rotational period. Transport's holding up just kind of nicely. They were a little bit lower in today's trading, but you can see that there is some weakness coming into the indices, at least at this point in time. Now, looking at where we are in terms of some other internal components, this is the 50-day, the percentage of stocks above their 50-day moving average, and the percentage of stocks above their 200-day moving average, and this is for the S&P 500. So you can see there's a deterioration. More stocks are beginning to trade below their 50-day moving average and below their 200-day moving average, and that, I think, is significant. It was significant when we saw this move here, eliminating this down move, this deterioration we saw here. It eliminated that divergence, and then of course now it's beginning to pick up again to the downside. In terms of the NASDAQ, you can see the NASDAQ 50-day percentage of stocks above the 50-day moving average declining pretty significantly. This is the trend line that occurred in the NASDAQ, and the 200-day, you can see, is the same thing. It's declining pretty dramatically. And then the same thing with the Russell. Russell showing more weakness. This is a breakdown that is fairly important in terms of the Russell above its 50-day moving average and its 200-day moving average. Now, if if you wanted to apply some technical aspects to this, there's a trend line we could draw right up through here, and it would probably come in, right around this 50 level. So the Russell has not made it in terms of the in terms of the 50-day moving average, but it would have broken it in terms of the 200-day moving average as well. So basically, what we have here, we have breadth that's been declining. This is a 30-minute chart of the spiders, 30-minute chart of the Qs. Breadth was declining, volume really not picking up. We did have spikes in volume at the close today. That's sometimes typical. As you can see, it happens sometimes at the close and sometimes at the open. But for the most part, volume was down for most of the day in today's trading. Breadth was fairly negative. So what's going to be really important in the coming week, at least if we're looking for some type of move to the downside, is today's low in the spiders. That's critical. And if that's taken out, then that would then suggest that we have broken the neckline, and we're going to be trading potentially substantially lower. And that all depends. The degree of that move would depend on volume and breadth. The same thing with the Qs. Looking at this 360 level, closed right at 362.55, as you can see there. So it would be important to see the Qs trade and close below 360 with breadth and volume, breadth decreasing and volume increasing. Should be a very interesting open to the week as we see how the indices are going to resolve these technical patterns that I've just discussed in this briefing, and to see what happens with the internals, at least to see if there's any move to the downside, if they begin to strengthen, supporting that move to the downside, or if we see another rotation back to the upside. Have a great weekend, and I'll pick this back up for subscribers on Monday.